Hello, and thank you for joining us on the Optimal Wealth Podcast, where we discuss creating passive income through real estate. Our mission is to help educate investors on how to grow wealth and invest passively. My name is Jared Alexander, and I am a passive investor, currently in 6 syndications as a limited partner. I am also the founder of Optimal Equity Group, which is a real estate investment firm that was created primarily to help educate the passive investor. We do that in a couple of different ways. One is we provide education to help give you the confidence to get into the passive investing space. And two, each episode we will interview amazing guests that explore the strategies, insights, and secrets used by successful investors. Whether you're a seasoned investor or just starting out on your real estate journey, this podcast is designed to help give you the confidence and knowledge you need to make informed and profitable decisions. Welcome to another episode of the Optimal Wealth Podcast. And today I am super excited to announce our guest here, Christian. And Christian and I actually met from a Jason Drees coaching program that we're both part of. And just looking forward to hearing his journey in real estate and how he learned about the passive investing side. So Christian, welcome to the show.
Thank you. Thank you, Jared.
All right. So, if you don't mind, Christian, why don't you tell us a little bit about how you got involved in real estate, that transition?
Yeah, absolutely. So, I'm a tech, so I'm a director of software engineering in my W-2 job, and I've got some extra cash that I have used to put into the W-2 into the stock market, and did fairly good there, but there's a lot of ups and downs. And so I decided to start looking for passive investments, joined the bigger pockets, started listening to lots of podcasts, and kind of figured out that there's like many avenues to do passive investment, but the multifamily seemed to be the one that got my attention. And then found a buddy that I do jujitsu with, who was also investing. And then one day he bought a portfolio and said he would sell me one of his houses and I could keep it for a year and he would buy it back at what he sold it for if I didn't want it. And I was like, that was too good of an option to just let it go. And so I did that. And of course, it worked out great as I had hoped for. And it was my first purchase and how I ended up in my first house, and then went out, found a second house, and I'm buying in a C-class environment. So we're talking $100,000 houses here. And so that worked out too. And then this is in 2020. And in 2021, we bought so I actually ended up JVing with this guy who was a long-term real estate guy, and then I'm now investing with him 100%. So we bought a 14 unit in Chattanooga, Tennessee, and recently bought a 16 unit in Jackson, Tennessee. That's kind of how it went really quick. I had, like many other people, a goal of 5 doors in, I think I had even said 5 years. That was done in much less, but it was really the first house that just had to be done. So I had an easy entry with a guy who helped me.
That's awesome. So, so a couple of things I want to touch on there. So you started listening to Bigger Pockets. You said probably, so this was maybe back in 2019, early 2020.
So I would say even like 17 and 18, I was very active.
Okay.
And listening to it and almost pulled the trigger on buying. Some things changed on my W-2 side that kind of made me like I got a little bump. And so I lost focus on real estate, but then came back again in 19. So that's where it really happened. Yeah.
Gotcha. Yeah. So, so 19, because a lot of people, it's easy to get stuck in that, what they call analysis paralysis phase, right? Where you just kind of keep educating yourself, and you can have a bunch of knowledge, but unless you take that action, that's where the rubber meets the road, right?
Yeah. Yeah.
And that's for my experience too. I mean, you definitely want to educate yourself prior to jumping into real estate and, take the educated risks and things like that and mitigate those as much as possible. But my
Yeah.
biggest learning curve has been from actually just trial and error. You kind of learn as you go. And
Yeah.
when situations come up, you kind of know what not to do next time, right? Or
Yeah.
what to,
Yeah.
focus on. So, and yeah, just like I started out in single family as well, and that was it just got me over that threshold, right? It just got me into the investing game, and now I am a real estate investor, right?
Yeah.
So you went from you did, it sounds like two single family homes.
Yeah. I went to single families,
Two
and
single,
then we went just straight to a 14 unit, just straight to 14 unit, and
which is a big jump, right?
it's a big job.
That's a big
Yeah.
jump. And then just to clarify for the listeners that don't know what JV means, that's a joint venture. So that's where you partner with somebody else. Typically, you have anywhere from 2 to 4 partners on that deal, that you
Yeah.
go and pull your money together and go out and buy these larger assets.
Yeah.
Um,
Yeah.
so that's awesome. So you did 2 of those as a JV. And
Yeah.
then, and two, just to back up a little bit, because if you haven't noticed, Christian's got an accent here. So, I believe, Christian, you're in Nashville, Tennessee currently, right? But,
That's right. That's right.
primarily or originally from Denmark.
Yeah. Yeah. So I lived in Denmark till I was 24. And then in 2000, so you can do the math, but in 2006, I moved to California. So I'm an electrical engineer. And so the big dream was Silicon Valley. So moved to Silicon Valley in 2006 and got a job as an engineer there. And then lived there to 2016, moved to Nashville, Tennessee, with my wife, and that I met in Nashville. And now we have 2 kids, and I live in Nashville. I've been living here. I actually still work for California, so I still travel back and forth to California on a 6 to 8 week basis. So, but that's how my life kind of started. Like started as an engineer, went to Silicon Valley, and then kind of start having extra cash on hand, trying to figure out what to do and not just spend it.
Yeah, and so what was the biggest driver? So you're doing your W-2 electrical engineer there. So what was, why real estate? What was the why there?
Well, yeah, so I had tried some other things. I had tried stock market. I'd even contemplating doing some day trading. And then I had thought about maybe starting a business, but all of these things are very hard to do as just side gigs. So I wanted something. My goal was to not have to I didn't want to trade hours for cash. So that was one of my bigger things. So wanted to keep my W-2, but then put some effort in and then have it running in the background, or set systems up that can run it in the background. Because I don't mind doing all of it, but I also want to have freedom to enjoy my life. So there was like a balance that I was looking for. And so real estate fit into that. Like it's a passive investment, and I don't have to oversee everything every day. So from the get-go, it was the fact of property management, even though it has a 8 to 10% cost, would give me a lot more freedom. So I could do an investment once, property management would take care of majority. It is not completely hands off, but they will take care of a lot. Like what I'm paying them is giving me a lot of time, and which is what I wanted.
Yeah. And now, do you still own those single family homes currently?
Yeah, yeah,
Gotcha.
yeah.
Okay. Yeah, cool.
I mean, so I haven't sold anything since I started buying.
Yeah. Okay. Well, so so you got the single family homes, your JV in these 14 units,
Yeah.
complexes here. And then so what else there are you, because this obviously this podcast we're tailored to the passive investor. So I think did you do one syndication as a limited partner LP?
Yeah, so I mean, we can back up a little. So before the multifamily happened, I was um, in a boot camp for multifamily with the DeRosa Group, and so there I kind of built up how to like I kind of understood the concept of having like the four people in your multifamily syndication and how to do market analysis and kind of got a good understanding of how the concept worked. And so from that point on, I started venturing out, wanted to see like what I could do, but it's also intimidating to look at a $15 million deal. Like I don't know if this is the right thing for me. So a smaller multifamily, so not a duplex, but not a 50 unit, right? That's that's how I ended up on the 14 unit. Of course, this boot camp has an interest in also making you a lead in there and an LP investment pool. And so they were sending out different opportunities and deals they had. And then one of them caught my eye, and I was like, "Oh, this looks good." So I attended the presentation when they went through and looked at the analysis. And so they happened to be investing right around me. So I kind of know the market. So they're in Kentucky and North Carolina. So that helped a lot. They kind of know this area. And they had the right numbers for me. And then I was also at a point where the whole paralysis analysis was like I wanted to try it. And I've always had this, I might lose money, but it's also education. So what would you pay for school? And so if I feel good in my gut about doing it and I have checked my side and I feel like I've tested and or like checked and kind of done my due diligence on this, I feel like it's okay to go ahead and pull the trigger. And then if things don't work, like if I bought something, I've always told myself I can sell it again. Like you can get out, and I feel like real estate is very forgiving. So you do get a second chance. Like it's not the stock market if you short sell or anything like that. Like you can actually you can wait an extra year before you get money. That's the other thing. So
Yeah,
yeah,
absolutely. Yeah, go
the
ahead.
LP part is, and it's taught me a lot. So in like just seeing their numbers and how they put things together, like I'm always looking at how the next quarterly report looks like and trying to understand how they communicate. So it's been very interesting to see their process, and actually got to meet them recently at the Bigger Pockets conference. And so got to talk with Matt, hear a little more about what's going on in their life. So this is good.
Yeah, yeah. Well, now I got to say, I would imagine it's helpful coming from the boot camp, kind of getting to know them on that level, and then okay, they
Yep.
present this deal. You know, probably a part of that boot camp is you're learning to underwrite these deals, kind of what to look for, the numbers.
Yep.
Of course, got to make sense. So then you take a look at that, and then so you're pretty much doing your due diligence already up front. And then a big thing for me, you know, when I did my first, you know, passive investment in a syndication was, you know, you gotta they talk about the know, like, and trust factor, right?
Yeah.
So you already know them. You know, hopefully you like them being a part of their boot camp, right?
Yeah.
And then just trust that, hey, they're going to be a good steward of your money, right?
Yeah.
And just like you said, I mean, it's an investment. Every investment has a risk, you know, associated with it.
Yeah.
But for me, the reason, you know, I also love real estate is because it is tangible. It is brick and mortar, right? Like you're
Yeah.
saying, they're investing right outside, you know, North Carolina, Kentucky. I mean, if you wanted to, you could drive by these apartment complexes, making sure
Yeah.
things are, or you know, you get typically monthly or quarterly email updates on the
Yeah.
property and improvements they're doing, and you can drive by and make sure that's happening, right? And just kind of keep an eye on things. And if, we get to a market where, prices do drop, which we're kind of in now, then, you still have an asset to hold on to. And these are long-term holds. These aren't, get rich quick investments, right? We're
No.
you're holding on. They're typically 3 to 5 years, which can result in some great returns, once the deal goes full cycle, which means it sells, and then they sell it for a profit. To sum it up, it's essentially flipping apartments, but much larger numbers, like you talked about, Christian. You go from $100,000 house to 10 million to one of the ones I was just part of was $100 million 3-property portfolio, right? So they can definitely get up there. So that's go ahead.
Yeah, so they also had like the property tours. So they would let people come up and see the property and kind of talk about the property, and they would also go live and tour the property. So like I definitely think that they got a lot of credit just from being somebody I could talk to. Like I felt like I trusted them with, first they educated me and then they presented me a deal. And I'm sure that there's a business behind this, but it worked well for me because I built a relationship with them. Because I've had other people that wanted to like have me as LP or like invited me to be LP, but there's a much bigger barrier when I don't know them. Like I need to have some information or see how do they deal with the unknown? How do they deal with the good days and the bad days? And during the boot camp, there's definitely things that didn't work out as it should, and there was things that worked out great. So you kind of got to see that side of them. So I think it was a really well played setup when I look back at it.
Absolutely, yeah. Hey, and they got a good business model there. But I think it's important because, as you alluded to there, I mean, you get to see how does it, because not everything is going to go as planned, right? So how do these operators, handle situations or problems that come their way, and how do they find solutions? And are they communicating that to their investors? Or are they getting out in front of it? All of this is super important, because that's what you're looking for in a good operator. Somebody who's just going to be honest, open, transparent, and have the experience to have a solution to whatever issue or problem may present at that certain time. So that's awesome. So you did the limited partner deal there. So now what's next? Are you looking at maybe becoming do you want to be more active in that role, or are you looking for some other LP investments to place your capital, or where are you at there?
Yes. So it's interesting because I was looking at the payouts, and there was not much payout here the first year, and kind of like my first experience with, this is where you're raising the rent and you have all the expensive loans. So it's like you don't have like a high cash flow, but that changes the next couple of years. So I was actually looking at, up until yesterday, I was looking at a 40 unit. And the 40 unit was set, it was in Tennessee. And I was starting to put a capital deck together, my very first capital deck, like trying to put together like senior debt, junior debt, like terms I hadn't really used before, figuring out what could I do, and realized that now I see how, like, why there's cash flow challenges on the first couple of years, because you buy something that is usually under rented and you have a higher cost to get in. So that's where I want to go. I want to get up to like the 30, 40, 50 unit. And that's my goal, to go up there, because I've also met some challenges as lenders are talking to me and saying, hey, you don't know how to run those. And I'm like, well, you're right. So I need to get started. Like I need to figure out what the challenges are. And I've had lenders who are educating me too. We're saying, well, here, this is when you need to have on-site property management, and trying to tell me a little about, like, this is the things we need for you to get a loan on this. So it's it's that. So it's bigger multifamily, and then I've looked at self-storage as well. That's another thing that I'm starting to look more at. So I'm part of accountability groups. So I have two accountability groups that I'm part of, and one gives me the ability to also join other side groups, and one of them is a self-storage group. And so I've talked to them doing my first underwriting of a project and just trying to see how that works out. Like I got really interested when I saw that it was more a business um, side, not so much tenants. So you don't have to deal with all the plumbing issues, and AC might still be there, but it's a different business. So I'm just poking around, seeing if there's something there that would be interesting.
Yeah. Yeah. No, that's awesome. So, and I think a couple takeaways there, Christian, just based on what you said, so if you're looking at getting into this space, again, this podcast is just tailored to the passive investor and how to create wealth, through real estate. And that's multiple different ways. It could be multifamily, apartments, self-storage, mobile homes. There's a lot of different avenues you can go down. But, I think some questions you just definitely want to consider when you're getting into this space is like, do I want to be active or do I want to be completely passive? And you can do both too, like Christian here. He's a limited partner, so he is passive in that deal. So when you're passive, I mean, you're completely hands off. I mean, you don't have any say on what goes into the day-to-day operations. You're just sitting there collecting a percentage of that money up front, or monthly or quarterly or however they pay out distributions, and then you get the big return once the deal sells on the back end, and typically 3 to 5 years or 5 to 7, depending on how the deal is structured. But one important thing that I just want to touch on too is, like you mentioned, Christian, the cash flow. It doesn't start out a very high percentage. I mean, some of these are 4 or 5%, because they're value adds. They got to go in, fix up the property, develop, execute their business plan.
Yeah.
So they can generate a little higher cash flow once they raise the rents and get their income, net operating income up on these properties. So, I think it's important to determine, are you a cash flow investor or are you a growth investor, right? Because if you're a cash flow investor, these multifamily value adds might not make the most sense right now, right? Because, you're typically on average maybe getting 6-7%, throughout the hold period. Some are a little higher, some may be a little less, but as if you're a growth investor, you're just trying to build your net worth, this could make a lot of sense, because in 3 to 5 years, you're just doubling your money. Typically those are what the projections are, again, depending on the deal. But if you could just keep compounding that, right? And then just doing, say, a deal a year or 2 deals a year, right? This is in 10 years, this is some life-changing, money, right? And talking about, again, alluding to the name of this podcast, Optimal Wealth, you can really create a lot of, life-changing wealth through just this compounding result. So thanks for mentioning that, Christian. So let's go ahead and transition here. So into what we call, or what we're going to call it for now, is our fire round. So we're going to go through a list of questions here, and I want to tie in a few things I know from speaking with Christian before, and some of the groups he's a part of on some of this as well. So Christian, the first question is, could you recommend a book on real estate for investors just starting out, and another book that is particularly good for cultivating a positive mindset?
Yeah, so I mean, I'm all classic on the how to get into real estate. That's the Rich Dad Poor Dad. And I felt like that one was the one that really made the wheels turn just a little different, like coming out of the whole don't have debt mindset, but good debt and bad debt. I still today recommend to people.
Yeah.
And
Oh,
to
great book.
start out with that, like if you have nothing, let's start there.
Yeah. No, great book. What about the mindset? The book you'd
So
recommend on mindset?
yeah, so I'm actually all about mindset right now. So I'm very deep in it and many books. The one that has given me the biggest push forward is the 10x is easier than 2x. And that was just it clicked for me. Like it was really where I felt like, okay, you gotta set some big goals. And I mean, Grant Cardone did the 10x and yeah, I just felt like the 10x is easier than 2x just really put perspective on it too. And it's good. It's all about habit tracking and setting big goals, set really big goals. And yeah, so that's what I like, and that's what I really like to go after the big things.
Yeah, no, both great books. You know, the Rich Dad Poor Dad book, that was just like you, Christian. It just gave me that shift, that mind shift
Yeah,
of and just opened my mind up to really a whole new world, you know, and changed
yeah,
kind of what I grew up with in school and what they teach in
yeah,
there.
exactly,
Right.
exactly.
And then yeah, the 10x is better than 2x. Our last guest actually referenced that as well. It's a popular book, and there's
Yeah,
a lot of books prior to that, as I mentioned last time too. You know, the Who Not How,
yeah,
um, the gain gap in the gain, and
yeah, yeah.
so definitely highly recommended books there. Definitely encourage y'all to check those out. So next question is, what is a practical first step the audience can take to explore the space of passive investing?
I would join a some level of accountability group that has real estate ties. So that would be my somebody you talk to every week, and you start getting more references to what they're doing. You start surrounding yourself with people who are doing it. And that's once you're in the environment, you start like seeing what people are doing, you start hearing it. And so like make it your top 5 people. Like make sure you have your interest. So if you have passive investment as your high interest, make sure you surround yourself with people who are doing it. Because
Yeah.
you start hearing the perks and also some of the flaws. Like I don't want to go out and say that everything is perfect, but just surround yourself with those people who are doing it. That will be my biggest thing.
Yeah, no, absolutely. You know, networking events, like
Yeah,
your local meetups. There's a ton of conferences.
yeah,
There's a ton of even Zoom conferences you can attend, or meetups during the week. So you can
yeah.
do this nationally throughout the U.S. You know, just by popping on a Zoom link. So definitely a lot of resources out there. Yeah. Um, to do that. And I like, you are who you surround yourself with, right?
Yeah,
And I always like surrounding myself with people that challenge me to grow and do better.
yeah,
Um,
yeah.
because that's the goal, right? And so, so this is going to tie into this mindset as well. What is a daily habit you practice keeping you on track towards your goals?
And so I do the miracle morning,
Mhm.
or savers,
Yeah.
and that's just there's some affirmations, some visualizations, and some mindset where you do I do breathing exercises in the morning, and it kind of gives me some calmness, and it just makes me focus on the daily task. And then I think there's a 15 minutes of reading, and I just have a topic that like something that I think I know, but I'm not sure. So I can look it up and just read an article about it, get it out of my way. And it's just a really nice way to start the morning. And so I have a goal of doing 5 of those every week. And it's just it works really well for me.
Yeah, but that's awesome. And the Miracle Morning, so that's anybody's not familiar with that, that's Hal Elrod. And he
Yeah.
wrote a great book on that called The Miracle Morning. There's also a documentary on Netflix I'd encourage y'all to check out as
Oh,
well.
didn't even know.
Yeah, it's pretty cool. My wife and I actually watched that not too long ago, and the next morning, believe it or not, we were getting up at 5 o'clock in the morning, practicing the savers, right? Which just
Yeah.
go through that acronym. So savers, you got silence. The
Yeah.
A is affirmations. V is visualization. E is exercise, and S is scribing, right? Or no, then you
Yeah.
got reading. Sorry, I forgot the R. So R is reading, and then S is scribing, so writing, journaling.
Yeah. Yeah. Yeah.
Yeah, just such a great practice. I mean, you kind of just, the goal is to do it for an hour, 10 minutes each. And then, if you do decide to do that routine, you kind of tailor it to what works best for you. But
Yeah.
yeah, I have found that definitely beneficial in the past. And it's a good reminder. I need to get back into that as well. Because
Yeah.
when I start the morning off like that, I mean, it just gets me centered for the day and just a lot more focused as well, and I find myself more productive too when I can do that.
Yeah, I feel more alignment too. Like I feel like I know exactly where I want to go for the day. Like I'm set up.
Yeah, exactly. And this isn't real estate, right? It's you can tie your physical health into this, your spirituality. I mean, all these different aspects of life, right? Yeah, which to me makes a huge difference in how I perform throughout the day. And then last question here, Christian, if you could be remembered for one thing, what would that be?
So it's funny. I just went through this recently with my JV partner, and so I want to be remembered for somebody who gave it all. Like somebody who didn't just coast. And so that's, for me, it's a matter of, I don't have like a large financial goal or I have a good life. Things are good, but I do want to do my best, and I want to be at my best. So I'm always like, I want to look back and say I gave it all I had. And I also want people to remember that I didn't just give up on things when they got tough. So that's my mindset, that we just, when it gets tough, we roll up our sleeves and we don't back down.
Yeah, just that perseverance, right?
Yeah.
Because, as we hear a lot in the mindset space, some of our biggest learnings are through the pain we go through, right?
Yeah.
And just, going through that, and makes us stronger too, as we do. So, no,
yeah,
that's
I was
awesome.
talking to my daughter, and so I'm a black belt in jiu-jitsu, and so I've clearly been going at it for a while. And she's like, "What's next, Dad? What do you want to do next?" I want to be a black belt in mindset. I just want to be really good at handling all the stuff that comes at you, because it's different up here. Like, it's not just physical, like it's mental. It's a different game.
It sure is. And I just, just to bring this home, I like how you touched on, like you're picking 5 things that you really want to learn more about, and you're, being intentional on reading about them and things like that.
Yeah.
And I think it just reminds me of just, how can I get better? Just the atomic habits, right? They talk about if I can get better, just change 1%, just do 1%, something each day, right? To get better to my goals. At the end of that, I'm 365% better at the end of the year than I was.
Yes.
Correct. Which looking back, that's a huge difference. But when you're in it, it's just those little things. And for me, I just the meditation has been, super beneficial to me, and just getting really intentional on and prioritizing what I want to do, right? And which also my physical health ties into that, and Christian, here you mentioned you're part of the Better Life Tribe. That's how it is. How can how can I be better at life in all areas, right? And and spiritual, physical, and mental. So no, that's
definitely
awesome.
Definitely a lot more than just money. Like, there's so many things. Like they go in and talk a lot about health. Like you might make it to your financial goal, but if you're dragging your feet and lost your family on the way, then like did you really get your goal? Like, was it really worth it?
Absolutely not. Yeah. Which, that brings me, like, that's my why, right? I want to have more time freedom and, more flexibility to spend with my family. Right. And be present at all the events and things. Yeah. So, well, Christian, thank you for joining us today. I really enjoyed our conversation and getting to know you more. If you could, before we go, tell listeners how they can find you or connect with you.
Yeah, so my Instagram handle is Morsingnet, so MORSINGNET. And so yeah, just catch me there, send me a DM, and I'll reach out to you guys. This was good, Jared. Glad to share my story and how I threaded the needle to get where I am, because it's all a personal journey.
That's awesome. Well, just think, if we can come this far in just this short amount of time, Christian, right? Just think what the rest of your life has to offer you if you just keep showing up and doing these things, right?
Exactly.
It's pretty cool to think about. So, all right. Well, thanks for joining us on another episode of the Optimal Wealth Podcast. And until next time. Thank you for listening to the Optimal Wealth Podcast. If you enjoyed this episode, please be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, be sure to optimize your results and take massive action on what you have learned here today. For more, visit optimalequitygroup.com.